So this is on the reliefs available for pension contributions. And first, perhaps we will talk about the two different type of pension schemes available. One is an occupational pension scheme that is tied to, say, an employee's um, organization, where contributions to occupational pension or occupational pension schemes will attract some tax reliefs. But apart from this occupational pension, an individual may also have their own personal pension scheme or plan, usually with, say, an insurer or a bank. Yeah. So there are two schemes here: occupational pension tied to, say, an organization, and also an individual personal pension. Yeah. Now, in the case of contributions to an occupational pension scheme, what may happen is an employee may opt for a certain amount of his monthly earnings to be, say, deducted and contributed to this occupational pension scheme, where such contribution by employees to their occupational pension can be sort of like deducted from his gross earnings. So when we want to work out his employment income or earnings, we can deduct whatever contribution has made to this occupational pension scheme. So that's the tax relief here. He can deduct his contribution to his occupational pension scheme. So I'll give an example. Let's say you have a case where his earnings is £30,000 a year, and he opt for up to 4% to be deducted and contributed to his occupational pension plan. So that's 1,002 deducted from his salary for the whole year. All right, maybe 100 a month. Yeah. Now this contribution to his occupational pension scheme can be deducted from his gross earnings. So we'll just deduct the 1,002 from his gross earnings of 30,000. So what he need to report as his employment income would be just 28,008 net of his contribution to the occupational pension plan. Yeah. So the 1,002 contribution to an occupational pension scheme is deductible. Yeah. Now at the same time, his employer may opt to also match his contributions. Say employee contributes 4%, the employer, in addition to paying him a salary of 30,000 a year, also contributes 4% or 1,002 to his occupational pension scheme. Yeah, so this is the employer's contribution. It's in addition to his earnings. Yeah, now you can see that employer's contribution would simply be tax exempt. So the company who contribute 1,002, the 1,002 employee's contribution is tax exempt. So when he report his employment income or earnings, he only have to report 30,000 minus 1,002 net of his own contribution. The employee's contribution, another 1,002, is tax exempt, so that does not have to be reported. Yeah. So that's what we call as one of the relief for such contribution to occupational pension. Yeah. Now, the other scheme here, the personal pension contribution, you can see that there is a tax relief where how the relief works is when an individual makes a personal pension contribution, say £4,000 into his personal pension plan, this £4,000 is going to be referred to as his net contribution, which is deemed made net of a basic rate tax. And what will happen is the net contribution, £4,000. So this is deemed made net of a basic rate tax of 20%. Yeah, the basic rate tax is 20%. Now, the tax relief available for such personal pension contributions is that um, he will be able to enjoy an extension to his basic rate band and high rate limit by the gross personal pension contribution. Yeah. So if you are given a net contribution, how you get a gross contribution, right, is that you simply regross the 4,000 by 100 over 80 because the net contribution is made net of a 20% tax. So that's the balance 80% after deducting a 20% tax. So the gross contribution here would be simply 100 over 80 of the net contributions. So you will have the gross contribution to be £5,000. Yeah. So what do you do with such a gross pension contribution? Well, it has the effect of extending his basic ribbon, where the 37,007 will be extended by this gross contribution of 5,000 to arrive at, say, 42,700. Okay. Now, this may be relevant for a high rate taxpayer, where what this means is instead of having an income of 37,007 taxed at the basic rate of 20%, he gets more of his income of up to 42,007 to be taxed at 22%. At 20%. So more of his income gets taxed at 20%. Where if let's say he is a high rate taxpayer, some of his income falling in a high rate is normally taxed at 40%. And now that his basic rate band is extended here, you have more income now taxed at the basic rate and less income taxed at a high rate of 40%. So he gets to enjoy a tax savings equal to 20% of his gross contribution here, because more income now gets taxed at 20%, less at 40%. So a tax savings of 20% of whatever gross contribution here. Yeah. Now this is in the context of high rate taxpayer where his basic rate band gets extended. Yeah. In the context of high rate taxpayer, in the context of an additional rate taxpayer, the high rate limit, which is usually 125,140, will also be extended by these gross personal pension contributions to now 130,140. Okay, so once this high rate limit is extended from 125 to 140, what effectively happen is now we will have less income to be taxed at the additional rate of 45%, but more income to be taxed at the basic rate of 20%. Okay, that's the outcome. Yeah, less income will fall in the additional rate, or to be taxed additional rate of 45%. More income now fall in the basic rate to be taxed at 20%. So if you have less income to be taxed at a high rate, more income to be taxed at a basic rate, then of course there will also be tax savings from making such personal pension contributions. Yeah. So I think For now, that's the message here. If an individual makes a personal pension contribution, you need to know the contribution is made net of a 20% tax or deemed made net of a 20% tax. You want to get the gross personal pension contribution first. And the effect is that his basic rate band and high rate limit will be extended by the gross personal pension contributions. Yeah. But let me just check with you one point before we see an example. For a basic rate taxpayer, let's say you have a basic rate taxpayer whose taxable income is 25,000 and he did make a personal pension contribution of 5,000 gross here. My question to you is, will the extension to the basic rate band by 5,000 make any difference to him when his taxable income is 25,000? His taxable income is 25,000, and because of making the personal pension contributions of 5,000 gross, you have his basic rate band extended by 5,000. Yeah. Does it make any difference to this individual whose taxable income is 25,000? You're correct to say no, because even though the basic rate band is extended, all his income 25K would have been taxed at the basic rate, right? So the extension to the basic rate band would not make a difference to him. So these personal pension contributions may not make a difference. The extension to the basic rate band may not make a difference to a basic rate taxpayer, but it will make a difference to either a high rate taxpayer or an additional rate taxpayer, where the effect is you have less income to be taxed at either the high rate or additional rate, 40% or 45%, and now more income to be taxed at the basic rate of 20%. Yeah.